this short video, we'll be covering the basics every beginner needs to know. What is forex? In this short video,
Yeah, good morning, good morning, good morning. If you can hear me, please confirm you can hear me. If you can hear me loud and clear, confirm you can hear me. If you can see my screen, confirm you can see my screen. Let's go, let's go, let's go, let's go. Type on the chat box, we go again. Type on the chat box, we go again. Type on the chat box, we go again. We go again. We go again. Everybody, type on the chat box, we go again. We go again. We go. If you can hear me, you can see my screen. Type on the chat box, we go again and again. Yes, sir. Yeah, that's my first word for you guys. We go again. We go again. It's the resilient mindset. It's the resilient mindset. We go again. All right? We go again. We go again. We go again. Very, very, very quickly. Today is Friday. I want to encourage us to take out today. If you want to trade today, no problem. But I will strongly advise to take out today to study and to backtest. Like I always say, weekends are not break; it's a bridge, right? Right. It on when the week is coming to an end. I tell myself, okay, that the weekend is not a break. The weekend is not a break; it's a bridge of lessons learned. Okay, is a bridge. It's not a break. So we are studying, we are backtesting, we are journaling, and we are reflecting. Four things we are doing in the weekend. Four things we are doing in the weekend. Right in the chat box. Number one, study. Number two, backtest. Number three, journal. Number four, reflect. Let's go, let's go, let's go. Weekend is not a break, it's a bridge. Number one, you study, go back to your videos, go back to your notes, go back to the liquidity video, watch market structure again, watch demand again, watch supply again, watch that video again, study again. Number one. Number two, back test. Go back to your charts, go back to the price action for that week. From Monday to Friday, how did price behave? How did price move? Number two, back test, back test. Number three, journal, journal. Whilst you are back testing and studying, you are taking notes, you are documenting. Journal like a wiser trader, documenting gold. Journal like a wiser trader. Then number four, reflect. Reflect. Think about how the week went, right? Reflect. How did I take my trades? Why did I take my trades that way? Why did I take my trades that way? And also now reflect. Reflect for the next week. So write out those four things. Number one, study. Number two, back test. Number three, journal. And number four, reflect. Let's go, let's go, let's go. Four things you do every weekend. Four things a wiser trader does every weekend. Four things a wiser trader does every weekend. Weekend is not a break, it's a bridge. A bridge to study, a bridge to backtest, a bridge to journal, a bridge to reflect. Let's go, let's go.
We are trading the same strategy, making money, but you are not. What do you think the problem is? Check your own. Does your own sound like that? Strong hearts. We are trading the same strategy. We are trading the same strategy, making money, but you are not.
Are we together?
Problem is. Check your own. Does your own sound like that?
Study, backtest, journal, reflect. Yeah.
Strong hearts.
Yeah.
We are trading the same strategy, making money, but you are not. What do you think the problem is? Check your own. I used to tell people that if I see a newbie trader, it's very easy. If we speak for 5 minutes, I'll know whether you're a newbie trader, whether you're a newbie trader.
All right. So, like I said, let's take out our advice strongly.
Like I said, let's
I will take out those weekend to do these four things. Okay, do these four things. And the rule is that I'm giving myself my trading reality. Like I said, I think yesterday or so, we are coming to the point whereby one good trading day, we are done for the week. One good trading day, done for the week. One good trading week, done for the month. One good trading month, done for the quarter. One good trading quarter, done for half of the year. One good trade half of the year, they are done for the year. And one good trade in a year, they are done for 2 trading years. So that's where we are coming into our next phase in our trading journey. That's one good trading day. That trade is able to cover for that week. If you are going to be trading again, it's just for example, if you are trading a 1 to 5, hope you are aware 1 to 5 is either 1%, sorry, either 5% of your account or 2.5% you have just done. If a 1 to 5 trade gets hit, hope you are aware that you have just done 5% of your account, or at best or at worst, you have done half of 5%. And it's not bad to do 2% every week. If you are doing 2% every week, in a month, you have done successfully 8%. If you are doing 5% every week, in a month, you have done 20%. So because we don't think in percentage, so we see every of our trade as common. So when you trade, your risk to reward, convert it to percentage. So if I have a 1 to 3 that got hit, that means I've just done a 3% or half of 3% on that trade. That's the way you should think. Okay. So we are going to go into our analysis. Then, okay, I want to make an announcement first before I go into the chat. I want to know if we are all. How many of us do we have here? Um, Please signify if you are here. Let me know. Let me see the number of people we have here. How many of us do we have here? So I don't know if I can announce this now. I'll wait till the end. Signify if you are here. Let me know if I should do the announcement now. I'll wait till you have a full house. Okay, let me go on. Oh, I won't get a response on time. All right, so let's go on. Let's go on. No, so let's study USD. Let's study what happened yesterday. Okay, let's study what happened yesterday. So yesterday, on fast time frame, I observed something. Look at this carefully. So when you're on the charts, you always want to ensure that your key levels on higher time frame are secured. So on 4 hours, if you are a buy trend, whether it is counter trend or pro trend, ensure that you are securing your order blocks, your demand zone. So for in this case, but this bullish trend giving us break of structures on 4 hours, right? On 4 hours, giving us all this break of structure. You notice why this guy moved was because it had to respect this block. Market is not random, guys. The market is not random. When you see a buy, it is buying because it has respected a location. That's either a demand, a fair value gap, or another block. And when you see a sell too, it's because it's respecting a supply, an order block, or a fair value gap. So this is what we are in between this mix now. We are in between that supply and this demand. We are in between this mix because when price got here, we had a what? We had a rejection, like a resistance when price got here. And when price got here, what do we have also? A rejection. So we are in between this mix. Okay. So this is what we have now. So that's if we are in between what those range. Now the battle is for price to now break out of either this supply or this demand. That's the battle now. Okay. So this USD. So we are in between this range. Let's go to 1 hour. Before we go to our daily high, let's first map out the overall range. Overall range. All right. So for me, I am biased. I am very biased today. Okay. I'm very embarrassed. I am bearish biased today. I am bearish. Okay. So let's go to our daily now and see what we have. Let's go to our daily time frame and see what we have. The only way we can be bullish is when, okay, hold on. Let's look at this. Where is Monday? This is Monday. Monday, Tuesday, Wednesday, Thursday, Friday. So Monday bullish, Tuesday bullish, Wednesday bullish, Thursday bullish, Friday. Most likely, Friday might, we won't conclude it until we have our previous day high, low, and close. Right. So let's not conclude. Let me not conclude I'm bearish. Yeah. Let me not conclude it. You can, right. Let's not conclude it. Previous day high, previous day high, previous day low, previous day high, previous day low, previous day close. Very important. Previous day high, previous day low, previous day close. So I'll go to another broker and we are going to see how price reacted yesterday on the same previous day high, low, and close. I'll go because yesterday's price action was so clean, right? So let's this and let's go to EURUSD FXCM. Okay, yesterday's price action for EURUSD was very clean. The sell was clean. The sell for yesterday. So yesterday was Wednesday. Sorry, 2 days ago was Wednesday into Thursday, right? Let's take that again. Yesterday was Thursday, right? So we are going to look at when is this high, when is this low, and when is this close, right? When is this high, when is this low, and when is this close? Hello, good morning. Hello? Um, sorry. I don't shout now. I left early this morning. I left early this morning. I'm at home already. I left early this morning. I left early this morning. So this was yesterday's price action. Previous this high, previous this close, and what? Previous this low. Now from daily time frame, what do you observe? When price opened for Thursday, you can see price first traded above the previous day close, right? Pay attention, guys. When price opened for Thursday, price went above previous day close, then what? Sold and closed, went and took out previous day low and did what? And closed. Can we see that? So let me screenshot this properly. This will be our guide. Okay? This will be our what? Our guide. Uh, All right. I want to reduce. Okay. Previous day high, previous day close, previous day low. Let's capture that. So in that case, that was an example of bullish to bearish. Bullish, bullish was what? Previous day. Previous day was bullish, right? Then to bullish to bearish. Bearish is what? Next day. So this will guide you when you are studying. So this particular day was a bullish to bearish day. Previous day was bullish. We had the previous day high, previous day close, and previous day low. So when the next day opened, we opened and traded above the previous day high, previous day close. All right, that was a manipulation for a buy. Then we now distributed to what? To sell. Let's now go to the chart to see. Okay, let's go to the chart to see. Let's go to the chart to see. So this is what we have, right? Then I drop down to 15 minutes. After marking your previous day high, close, and low on daily time frame, you go to what 15 minutes and adjust your what and low. We are trying to investigate yesterday's price action. Okay, we are trying to investigate yesterday's price action. So what do? We adjust our previous day high into what the next day. Adjust your previous day's high into the next day. Adjust your previous day's high into the next day. Adjust your previous day's low into the next day, and adjust your previous day's close into the next day. That's the next step. So step one is what? You mark out your on daily time frame, your previous day's high, previous day's low, previous day's close on daily time frame. That's step one. Right? Then step two is what? You adjust your PDH and C and L into what? Into the range. Okay? Now observe what happened here. Now look at what happened. When Asian started, what were we doing? We were trading above the previous day close. That's the Asian section. Then when London opened, we went to what? Distribute below. That was a sign for a sell. So our sell got into this other block for 15 minutes. That was it. That was all we had for yesterday. This was the price action. We went above the previous day close, right? Then London opened, we distributed below previous day close as a break of structure. And we what? We pulled back to what? The other block, AIT. There's an I here, inducement. If you go to your 5 minutes, let's go to 5 minutes. You have your AIT there. Okay, this is 5 minutes, right? And this is your AIT right here. This is your inducement. Okay, inducement, and into what? Into the period high. And you have either 9 o'clock, 9:15. Either you use candlestick confirmation or use your sell limit, whichever way. So if you're using the sell limit, you're selling from here. Stop loss is there. You can add 12 pips. That's 120, and your take profit is at the previous day low. Your take profit is at where? Previous day low. That's for a day trader. That's 1 to 4.5. That's not bad. Okay. If you are using a candlestick confirmation entry, for a candlestick confirmation entry, your sell is at 9:15 candlestick, and your stop loss is at a candlestick high. That's 10 pips. I think you can get to 1 to 5 here. Let's see. Okay, yeah, yeah, this give us a 1 to 5. So 1 to 5, 1 to 4, you are done for a trading session. You don't need much. For a trading window, if you can have 1 to 5, even 1 to 3, for a trading window, if you can have 1 to 3, one for London, 1 to 3 for New York, you're good to go. So we have this pattern for yesterday. Is it clear? From how we drew out our previous day high, low, and close. Is yesterday's price action clear? Yesterday's price action, I trust is clear. So that's London section secured for a sell. London section secured for a sell. Then let's look at how New York section give us opportunity. London section secured for a sell. Okay. This is how to journal, right? Taking note of how trade played out so you can take advantage of them next time. This is how to journal. So what do we have here? Like I said, we drew previous day high from the daily time frame, previous day close, and previous day low, right? Then we drove that to 15 minutes and we identified the range of today from Thursday start to Thursday end, adjusting the previous day high and low and close into the range. Then we have to wait for price to be trading for a buy to be trading above previous day close with a break of structure, for a sell to be trading below previous day close with a break of structure. So when price started, we started above previous day close, but I have said if you are seeing price above PDC, Asian section, don't trust it. So this is not going to be a bullish buy because it's Asian section until London is still above previous day close. Then you can say, okay, he wants to buy. But after Asian had given us above PDC, you can see that there was a distribution. Okay, this was around that opening of 8 o'clock, right? Distribution, then pulled back to 9 o'clock. Then 9:15, we had the confirmation at the other block, right? And that was the sell. That was the sell. So you can either hold it to your, of course, it was New York that the guy got to take profits. Okay, if you have chance of scaling in, why not? If not, if you have chance of scaling in, why not? If not, but with this, you are done for the 1 to 3, 1 to 4, 1 to 5. All right. So this way, and also looking at this from the point of view of your Asian range variant, what consolidated Asian range 27 is consolidated, and we did not take out Asian I. So this was a V2. V2 means that after Asian has ranged, it breaks out of Asian low, pulls back into the Asian range, into an origin or the equilibrium, and sell. So this obeys V2. So let me put it there. Obeying V2 variance. Obeying V2 variance. What is V2 variance? No, man, no manipulation above Asian I, but rather distributed and pulled back into Asian range 15 minutes order block for a sell during London and New York. So you can see I'm writing my notes. You have to have notes to all your journals so you can be able to go back and study. That are we clear? All right. Okay. So that's what we have for yesterday. So let's go into today. So what do we have today? We check in today's daily range and check in what Monday, Tuesday, Wednesday, Thursday has been doing. Right. So let's start with marking out today. Back to our daily time frame. So we're going to mark out what yesterday's high, yesterday's low, and yesterday's close. Step one. Yesterday's high, yesterday's low, and what yesterday's close. Yesterday's high, previous day high. Okay? Previous day high, P D H. Previous day low, PDL. And because we closed bearish, our previous day close will be what? Will be beneath. Because we closed bearish, our previous day close will be here. Previous day close. Right? That's step one. This is what? Step one. So I'm going to screenshot this again as being step one on our what? On our group. So let me mark this. Step one. As at 7:53. This is what we are having. Previous day high, previous day close. Oh, see me. Previous day close, previous day low. PDC, and this is PDL. Fantastic. So let's screenshot this again and let's put it in our group. So this is um, potential. Okay, let's Friday setup. Okay, let's say Thursday. Thursday was bearish, right? Now Friday, you don't know what Friday will do yet. So the question is, so what Friday? What will Friday do? Thursday is bearish, so we mark the previous day's high, previous day's low, and previous day close. So the question is, what will Friday do? Right, so that's the question now. We're investigating. After doing this, what do you do? You go to 15 minutes. 15 minutes. 15 minutes because it's a minor structure that gives us a pretty much good price action. 30 minutes will be too big. We want to have a time frame that will give us detail. So that's why we use 15 minutes. All right. There's nothing special about that. So what do I do? I mark out my Friday. Let me start from 10 p.m. 22 o'clock. Okay. Friday started here. So I will adjust my previous day high. I will adjust it like this. Previous day close. So currently, you can see that price is currently trading above previous day close during the Asian section. Like I said, we are not going to be moved by this yet. This might be a manipulation. No? Price can still later come and trade below previous day close and continue selling. So until London section give us a distribution, all right, we won't conclude that we are bullish yet. Until London section give us a distribution, we won't conclude that we are bullish. Okay. So this is why I say I am still bearish is because the price action here is giving us what bearish sentiment. We have taken out this. I've taken out this inducement of this New York high. That's a sweep. I will call it a. I'll call it inducement. Yeah. Taking out the inducement, I will post bearish. So this one alone is a confirmation that we are selling. All right, for me. So I need to even start. Let me put on my first sell there because so for me that's my first sell. Right, I'm selling from there. So I'm selling from here. My stop loss just above here. Right, that's what I'm doing. So where's my take profit now, guys? I'm taking profits. My low, the low is the first take profit. That's a 1 to 3. So this is perfect. That's perfect. Okay. Then my next take profit will now be this New York low here. New York low. Next take profit is New York low. 1 5. So that's my okay. So that's it. That's it for me. I'm taking my sell here, taking my profit here, and that's what I have for today. Let me send this to the group. Let me send this to the group. Yep. Let me send as executed because um, All right, so let's check out thing for now. We have said we want to do the weekly range. Now we have done the daily range, right? Friday. Let's now look at how Monday has been playing out. Let's see what we have. Let's see how Monday has been playing out. Let's see how Monday has been playing out. Okay. Let's see how Monday has been playing out. Monday, Tuesday, Wednesday, Thursday, up to this time. Let's do our weekly range. Yeah. This is Monday. Um, this is Tuesday. This is Wednesday. This is Thursday. Yeah. Huh? Okay. So I need to wrap up now. Monday I. All right. So I need to wrap up now. Monday I. Monday low. So wow, this is showing something very amazing. We had this. We had this. Now we are breaking out of previous days of Monday I. Yeah. So this is a sign that this gives me a bullish sign. Seeing something now. I'm seeing something already that the buyers no one agree. Because that the buyers are because we didn't distribute and so what I'm observing here now. We took out Monday's high, we came into Monday's low, we still broke out again. That's serious. So this is the demand zone that was the 4 hours demand zone I was expected. 4 hours. So could it be that today wants to buy? Could it be? That's tricky. Okay, let's see. Let's see, let's see, let's see, let's see, let's see. So based on this now, this has even given us a change of character. If you look angle, it has given us a change of character. That means if I thought we are selling, the sell is just going to be a pullback. This sell is going to be a pullback for the buy continuation. So the sell won't last long. If I thought we want to sell, the sell will just be a pullback. But let's observe, let's observe, let's observe. So I'm seeing a London sell, New York buy kind of scenario. Pre-London buy, London sell, New York buy. Okay, but let's targeting the. We might just be targeting the Asian range. Okay, just targeting the Asian because the sentiment is still bullish. All right, sentiment is still bullish, so we're just targeting the Asian. We can't do much. This is not a good. We can't do much. We can't do much. Yeah, we can't do much here. But let's observe. Let's observe. But for this guy to buy, you have to take out this engagement. Definitely, right? For this guy to buy, you definitely have to take out this engagement to buy. So that sell will surely happen, right? That sell will surely happen. There's no way about that. That sell will surely happen. You have to be very careful of the sell. All right, so this is going to be a short one. I'm going to discuss everything else on the group. Since we are not active this morning, we are not engaged this morning, so I need to call it a day. Right. So we'll see you all in the group, the meditation group. We'll talk and discuss better there. Thank you.